of hello, hello. No, you continue. Alright, so let's continue here. This small problem with the audio system. Alright, so we are going to cover different aspects under the current affairs part, like the GK part of the banking examination, the clerk examination. One is the current affairs, second is financial awareness, and third is computer awareness, right? Also, along with current affairs, we'll do 2 sessions for GK, that is general knowledge, static GK. So this is the first class for financial awareness, in which we are going to talk about the banking concepts. Important banking concepts. I'll be taking you through a number of sessions to talk about banking concepts and to understand the economy and financial basics of India, so that if you get a question from financial or economic awareness in the examination, you are able to solve them. So in today's class, we'll be talking about the banking concepts, some of the significant important banking concepts that you as a common man should also be aware of, right? So let's say, for example, types of accounts. So people go to a bank. I'm sure you also have an account in a bank. So people should know, common man should know about the different types of accounts that they can be opened in a bank. So here we look at the 4 types of accounts. One is the current account, the second is savings account, third is recurring deposit account, and fourth is fixed deposit account. So what is the current account? Current account is normally used for business purposes. So businesses have current account in the bank, in which they can keep their money, they can take transactions and deposit and issue checks from the current account. In current account, there is no interest paid on the amount that is standing in the current account. The amount that is deposited, or the amount that the bank has in the current account, they will not be paying any interest on that. The benefit is that the number of transactions that can be done are more, and that is why current account is a type of account that is used for the purpose of business. Next is your savings account. Savings account, as the name suggests, is mostly a personal account. People have, you and I have our savings account in a bank, in which our primary motive is to save money, right? So instead of keeping the money in our home, we keep the money in the banks for it to be safe, point number 1, and also to earn interest on that amount. So if you keep money in the savings account, you can get up to 4%, and in some banks up to 6% interest on the amount that is deposited and is with the bank in the savings account that you have with the bank. Clear? And so that's what is called a savings account. Unlike current account, the number of transactions here are less. Also, in current account we don't have interest, whereas in savings account we have interest. The third type of account that you should be familiar with is a recurring deposit account. What is the purpose of a recurring deposit account? Suppose you want to open an account in which you want to deposit money every month, for the purpose of saving and for the purpose of increasing your capital, increasing your overall bank balance, or to utilize money efficiently. So you can't deposit large amounts together. So what you could do is, on a systematic level, maybe a 5-year, you can open a 5-year recurring deposit. Let's say you deposit 1,000 rupees every month, and over a period of time of 5 years, there will be a sufficient amount deposited in the bank, on which the bank will also be calculating interest on the basis of recurring deposits, and at the end of the term you can withdraw the entire money along with the interest. That is what is called a recurring deposit account. And the fourth type of account is where you have a single deposit which stays with the bank for a fixed period of time, and that is called a fixed deposit or a term deposit account. We can call it a fixed deposit or a term deposit account. Clear? So you can see these are the four types of accounts that you have in a bank, and we say current account and saving accounts are what are called as demand deposits. But these are the deposits that can be demanded by the customer, the account holder, at any point of time. They are the demand deposits. Whereas a recurring deposit account and fixed deposit account are what we call as term deposits. Later on you will see, when we discuss about different types of rates and ratios in the future sessions of banking, we will be using the word NDTL, net demand and time liability. For example, we say that the cash reserve ratio, that is the ratio of total liquidity that the bank has, must be kept with RBI at all points of time, is what is called as the cash reserve ratio, is calculated as 4% of the NDTL. So what is NDTL here? So since we are discussing types of accounts, let's understand. NDTL is here for net demand and time liability. So what are the demand liabilities for a bank? The savings account and current account, what is also called as CASA, C-A-S-A. These are your demand liabilities, and the recurring deposit account and the term deposit account are time liabilities. So we say that cash reserve ratio is 4% of the bank's NDTL. The bank must maintain at all points of time with the Reserve Bank of India. Clear? So what we have seen is a basic understanding of the four types of accounts that people can have in a bank. Now let's look at the next thing. What is a check? Now today we can transfer money easily electronically by using different types of apps and different types of electronic fund transfer methods like NEFT or RTGS. In earlier days, if you had to transfer money from one account to another, you have to withdraw cash and then give it to the person, or you have to give a check. So what is a check? Today also people use checks. I'm just saying that today it's more common for people to transfer money electronically. A check is a negotiable payment instrument that is issued by a bank account holder for making payments to an individual or company and cash withdrawals from the bank. So what you can do is you can pay using a check to an individual, transfer money to his account, or you can transfer money to a company can pay you some money through a check, or you can also use a check for cash withdrawal. Clear? Now we will see later on what are different types of checks and what are the key elements that you should know about a check. We look at a check here, a check leaf here. What are the different things that you will find on a check leaf? First is that there will be a name of the bank. So this is the name of the bank, that is the origin of the check, from which the check originates, bank that is issuing the check, the name of the bank. Second thing that is there very important is the account number. So there should be an account number in this place, something like 011 something, some ending in 234. There will be an account number here. This is the place for the account number. Account number of the account holder, the one from whose account the payment is supposed to be made, right? Now here we have the value in rupees, in words, and here the value of the amount in numbers. If you want to pay a cross check, you can cross it here. This is the person who is going to receive, name of the receiver, the payee. The one who is paying is the payer and the one who is receiving is the payee. Date is very, very important to be mentioned in the check, on which day the check should be given. Signature will come here, signature of the account holder, you have the check number. So, what is this here? This is a 6-digit number, which is the check number. Every check will have a check number. And here we have what is called as the MICR code. What is MICR? MICR is the magnetic ink character reader, and you can see that it's a 9-digit code which gives information about the bank, the branch, and the account. Right? That is the MICR code, and then we have the serial number here. This is the banking code and serial number of the check. So, main things to know about are the check number, the MICR, and also the IFS code. Right? What is this one? This is your IFS code, IFSC. The C stands for code, and IFS stands for Indian Financial Services, which is a 11-digit code. You can see here IFS is an 11-digit code, 11 alphanumeric code, you can say, digit letters, so alphanumeric code, whereas MICR is a 9-digit code. There are no alphabets here, 9-digit code, magnetic ink character reader. All of these things are the different elements that you will find. You will find the address of the bank branch, clear, which can also be specified by the IFS, because basically IFS contains what? IFS contains the first few letters in the IFS code are the name of the bank. Let's say for example HDFC, followed by the branch information from which the check is being given, or the branch in which the person has the account holder's branch information that is there. So, these are the things that you see on a check leaf. Now, let us understand now things to know about checks. A check must be drawn upon a specified bank. That bank from which the check is drawn is called the drawee, and a check must be signed by the person, the drawer issuing the check. The one who is issuing the check is called the drawer or the payer. A check must have the name of the recipient, the payee of the check. Who is going to receive the check? The amount is going to be transferred to which person or to what account? Name of the account holder, the payee. A check must mention the amount of money in words and figures both. A check must mention the amount in both words and figures. A check must be dated. There should be a date mentioned on the check, and currently checks are valid for a period of 3 months. Post the revision in 2012. Before 2012, checks were valid for 6 months, but post 2012 checks are now valid for 3 months. Okay, currently checks are valid for a period of 3 months. Converting physical checks into electronic checks is called the check truncation system, CTS. What is CTS? Is a way when you convert a physical check into an electronic check, for faster clearing of the check. Clear? The check goes to the clearing houses and gets cleared faster. So, even if we have an outstation check, it can get cleared within 1 or 2 days. Okay, earlier an outstation check would take almost 5-6 days, sometimes 7-8 days to get cleared, but today even an outstation check can get cleared in 2 days. That's possible through the CTS, the check truncation system. Alright, now let's look at the classification of checks. What are different types of checks? So, we have local checks issued in the same city, outstation checks issued in some other city. So, if you have a bank branch, if you have an account in a branch in Bangalore, and a person gives you a check who has an account in Chennai, then that check which is originating from Chennai, the drawee is from Chennai, is an outstation check. What is an at par check? Is a check which is accepted at par, means at the same value at all its branches across the country. You will see this word at par check mentioned in checks today. Unlike local check, it can be present across the country without attracting additional banking charges. There will be no additional charges levied on you if you deposit an at par check. So, whatever is the amount mentioned on the check, that much amount you will get transferred into your account. Okay, that is why we call it an at par check. Normal value checks, checks below the amount of rupees 1 lakh are called normal value checks. Below the amount of 1 lakh rupees, please note here, any check that is below the amount of 1 lakh rupees is called a normal value check, and amount higher than 1 lakh rupees is called a high value check. Clear? So these are the different types of classification of check based on local. We'll see some more classifications based on functionality of a check. Clear? So right now we're talking about local checks within a city or in the same area in which the branch is located, and then we have an outstation check, at par check, normal value check, amount less than 1 lakh rupees, high value check, amount more than 1 lakh rupees, and gift check. Checks are for gifting money to loved ones. Are gift checks, the value may be from 100 to 10,000 rupees. So these are the different types of checks that you can see in terms of one type of classification. Now let's look at the other types of checks based on functionality. An open check. A check is called open when it is possible to get cash over the counter at the bank. So you take the bank check to the bank and you give the check across the counter to the cashier. The cashier will give you the amount in your hands. That is what is called an open check. The holder of an open check can receive payment over the counter, so it can be used for withdrawing money, or you can give it to someone by signing on the back of the check. You can also sign at the back of the check. So I can take a check, write self and sign behind the check and give it to you. You can take it to a bank and get that amount by cash over the counter. That is what is called an open check. Next is a bearer check. A check which is payable to any person who presents it for payment at the bank counter is called a bearer check. A bearer check can be transferred by mere delivery and requires no endorsement. So now we are writing the name of the person who should be given the money. It cannot be taken by anyone. The person whose name is mentioned in the check, only he can take that money over the counter, which is what is called a bearer check. An order check. It is one which is payable to a particular person. In such a check, the word bearer may be cut out or cancelled and the word order may be written. The payee can transfer an order check to someone else by signing his or her name on the back of it. And then we have the cross check. The check is crossed, as I showed you earlier. If it's a check on the corner, we cross it, or we can write like this: account AC. That means it's an account pay check. A cross check is an account pay check where the check cannot be cashed over the counter but can be deposited only in the account and in the name of the account, which should be in the name of the person whose name is mentioned as a payee on the check. Clear? That is what is called a cross check. Now other types of checks we talk about. A self check is written by the account holder as pay self to receive money in physical form at the bank branch over the counter is called a self check. So you can say pay to and then you can write this self, right? That will become a self check. You can take the check maybe along with an ID card, or you can sign behind the check and you can withdraw the cash over the counter, which is called a self check. A post dated check, a PDC, sometimes for electronic clear system or also for EMI, we give a post dated check. So a check in which I have given a future date. Let's say right now we are in the month of December 2018 and I give you a check for February 2019. That is what is called a post dated check. A banker's check is issued by a bank drawing money from its own funds. Usually what happens when we give a check, there is an account holder who is issuing the check and there is a person to whom the check is being given, and the amount will be transferred to the account of the payee, the one who is going to receive the money. Account is deducted from the account of the person who is issuing the check and going to the account for who is the recipient, the receiver of the check. But when the bank is giving a check from where the fund will be deducted from the bank's account, the bank's funds, its own funds, rather than from the fund of the account holder, then it is called a banker's check, and usually it is used for larger value transactions in real estate and other such things. A banker's check is used. A traveler's check, earlier when we did not have debit cards and credit cards and it was not safe to carry physical money when you are traveling through train or bus or long distances, then what would people normally do is they would go give some money in a bank and ask them to issue a traveler's check. You could take the traveler's check, go to some other place wherever you are traveling to, go to the bank of the same bank and just present the traveler's check and get that cash and then use it for your for for your expenditure, your different expenses in that foreign land or place. So that's what is called a traveler's check. So now we have discussed the different types of checks today and all other concepts that we normally don't look into carefully and we don't pay attention to. Now the next very important thing that is more important for your big exam today is to understand the different concepts of electronic fund transfer. Today is the day, age of digital transactions, online transactions. You can see that the government is trying through Digital India and different types of digital initiatives to make sure that people move from physical money to digital money, where they stop making transactions using physical money and start doing transactions online through mobile applications, web applications and other such ways of electronic fund transfer. Clear? It has got more attention after demonetization because we had a huge crunch of cash in the country, and then people had to use different types of online payment options for making their day-to-day purchases also. Clear? So what are the different ways of transferring money electronically? How many do you know? How many ways of electronic fund transfer are you familiar with? So one is NEFT, that is National Electronic Fund Transfer, and then we have RTGS. Now we'll be discussing each of these separately. We're just listing out the different ways of transferring funds online, electronic fund transfer. So one is NEFT, National Electronic Fund Transfer. Usually when you make payment to someone through your e-banking using an account and account information, either by going to the bank's website or using the bank's mobile application, when you transfer money to a third party, you are mainly using NEFT, that is National Electronic Fund Transfer. Then we have RTGS, that is real-time gross settlement. That's again an electronic fund transfer, very similar to NEFT, but there are some differences. We will see in later slides what is the difference between NEFT and RTGS. Next is IMPS, that is immediate payment services. We will look at each of these one by one and what are these things and what should you know as a bank aspirant, as an aspirant of the banking examination about these electronic fund transfer methods. IMPS, UPI, Bharat QR, BHIM, NUUP, MMID and EFT POS. So these are the things. You can see 9 different things are there that you should be familiar with, must be familiar with. These are very important and critical for your examination. Okay. Now out of this we will not be discussing separately EFT POS. Now EFT POS is basically electronic fund transfer, electronic fund transfer at point of sale, at point of sale. That is what we mean by EFT POS. EFT POS is electronic fund transfer at point of sale. What is this POS? What is the point of sale? When you go to a shop and you buy something and you use the debit card machine, the point of sale machine, and you swipe a card and make the payment, what happens? Fund gets transferred electronically from your account into the account of that shop owner. So what is happening? Fund is getting transferred electronically. Obviously this is electronic fund transfer. It is happening at the point of sale. Today when you go to a petrol bunk or you go to any restaurant or shop and you buy anything and you pay using your debit cards or credit cards, that is what we mean by the EFT POS, electronic fund transfer at point of sale, using the debit card, credit card swiping machines that you do. So we will not be discussing this separately. This is sufficient information and I am sure you are familiar with what is now the meaning of EFT POS. So first let's look at NEFT and RTGS. What is the difference between RTGS and NEFT? So we have here divided the differences, the key points to know, into 4 parameters. What is the full form? Obviously you should know the full form. Full form based questions can come in the examination. NEFT stands for National Electronic Fund Transfer and RTGS for Real Time Gross Settlement. What is the minimum maximum amount that can be transferred? In NEFT there is no lower or upper limit. As mentioned in the RBI website, there is no lower or upper limit for NEFT transactions. You can even transfer 1 rupee online. But if you want to transfer money by through cash, remittance at the NEFT counters in a bank, so you don't have an account in a bank, but you want to transfer some amount into the account of a person who has account in a bank, and you can do that by going to any bank and then using the cash, depositing it in the NEFT counter. The machines are there that can help you transfer money. Clear? So for cash remittance, the maximum is 50,000. For RTGS, the minimum is 2 lakhs. So you should have a minimum amount of 2 lakh to transfer. There is no upper limit. Different banks have different upper limits mentioned in their websites. Like for example, HDFC says that per transaction upper limit is 10 lakh rupees. But if you go to RBI website and check it there, you will see that there is no upper limit for the RTGS transaction or the NEFT transaction. For RTGS, the minimum limit is 2 lakh rupees. Now, what is the mode of transfer? How is money transferred in NEFT and RTGS, and what is the difference? If both of these are electronic ways of fund transfer, then what is the difference between RTGS and NEFT? Usually, RTGS is used for higher value transfers like 10, 20 lakhs, 30 lakhs. If you want to transfer huge amounts, then you have to use RTGS. NEFT can be used for any amount. In addition to that, the major difference is in terms of where the settlement is done. See, in the case of NEFT, settlement is done in batches. So in batches, all the NEFT transactions initiated are settled in batches every half hour. Clear? On a half hourly interval. So the maximum time that can take for when you do a NEFT transfer, the maximum time it takes for the person to receive is half an hour. Let's say the transfer is supposed to happen at 10:30 and you do at 10 o'clock, then the amount will be reflected after half an hour. But if you do a NEFT settlement at 10:29, the amount will be reflected within a minute itself. Okay. So settlement is done every half hourly basis from 8 a.m. starting from 8 a.m. to 7 p.m. on working days, and that's the timing for the NEFT transaction in batches. Whereas in RTGS, settlement is done real time. As we transfer, the bank has the funds, immediately the funds are transferred to the other account, and the timing is 9 a.m. to 4:30 p.m. on working days. So that's about the mode of transfer. That's why we say real time gross settlement, right? And here in NEFT, in batches we are transferring. Requirement in NEFT, the requirement is account number and IFSC, that is Indian Financial Services Code. And what is IFSC? Already I have discussed with you, 11-digit alphanumeric code. And in RTGS also, account number and IFSC is required to transfer money through RTGS. Next, let's look at the UPI and Bharat QR. What is UPI? It is Unified Payment Interface. UPI is unified. So know the full form. Very important. UPI is quite in news. You go to apps like Paytm or Google Pay or TazePay, you will find that the payment is being done through UPI. So what is UPI? Unified Payment Interface. It's an immediate real-time payment system used for electronic fund transfer of funds between two bank accounts through a mobile app platform. It's definitely through a mobile platform. It was developed by NPCI. What is NPCI? National Payment Corporation of India, and is controlled by RBI and IBA, the Indian Bank Association. So UPI is a service, it's a system through which money can be transferred electronically from one bank account to another using a mobile platform, through a mobile platform. Okay, developed by NPCI, that is National Payment Corporation of India, and that is NPCI. You can see it here also, NPCI. What is Bharat QR? Again, it's not used so much. People don't know much about Bharat QR. It's a kind of a scan code, like a QR code. Okay. Where you have your mobile numbers and account information, you just have to scan it and the money will get transferred immediately. You don't have to type anything, you don't have to do anything, you just have a scan code, and that scan code helps you in transferring money from one account to another. It is developed with by NPCI in collaboration with MasterCard, Visa, Amex and RuPay, and it's a kind of a digital payment system. Without card or card swiping machine, you can do this without card or card swiping machine. So you go to a merchant, and that merchant has a scan code there, and you just scan the code and transfer the money. You don't need a card or card machine for this. That is why it's something that will, I think in future you will see it be coming across most of the merchants. This is Bharat QR. Next is Bhim and NUUP. What is Bhim? So if you go to Paytm mobile app, you will see that BHIM, Bhim is mentioned there. It is named in honor of Dr. Bhimrao Ambedkar, and Bhim stands for Bharat Interface for Money. And then next is NUUP, that is National Unified USSD Platform. Let's understand both of these. So Bhim is a mobile app, whereas you see UPI and Bharat QR are system services, whereas Bhim is a mobile app. It's a mobile application developed by National Payment Corporation of India to promote digital transactions using UPI. You don't have to use Paytm or any other mobile application. The government of India has made an application for you that is called Bhim, and you don't have it. Most people don't have Bhim application in their mobile phones. What they're using is they're using Bhim applications which is merged into other mobile payment systems. So Paytm also has Bhim in it, or Google Pay has Bhim in it, right? So Bhim is a mobile app developed by NPCI to promote digital transactions. You need to have an internet enabled smartphone and a UPI compatible bank account. So every bank account should have a UPI linked to it, right? And using this UPI linked bank account, you can transfer money. You can have multiple UPI linked accounts in the Bhim app, and you can choose which one you want, right? So what is UPI? It's a service, and what is Bhim? It's an app. There's a difference between UPI and Bhim. Bhim is a mobile application that uses UPI for electronic fund transfer. And what is NUUP? That is very less, not known by most of the students. It is a National Unified USSD Platform, Unstructured Supplementary Service Data Codes. Through this, you, without a internet connection, without a smartphone, using any normal phone with buttons on it, the old Nokia phones, you can transfer money just by using the GSM service. Clear? Just by using the GSM service, you can transfer money using Aadhaar enabled payment system, AEPS. Using Aadhaar enabled payment system, you can transfer money using your mobile phones, not using internet, and that is what is difference in NUUP and all the other things that we discussed like UPI and BHIM. And since there is no way of tracking here, it's not used, can simply work by transmitting information using GSM. NUUP service is limited to checking account balance, generating mini statement, and transferring funds via MMID, mobile money identifier, a code that is generated by banks using IFSC or Aadhaar number. So this is a way where you can transfer money just using a GSM phone without having any internet connection. That is what is NUUP. Next is what is MMID and what is IMPS. Full form. You can get questions based on full forms in the exam. MMID is mobile money identifier. Every bank, when you go to an app, there will be the MMID in that app that helps you, and it's a 7-digit unique number issued by the bank upon registration. Remitter, customer who wants to send money, and beneficiary, customer who is receiving money, should have this MMID for doing interbank fund transfer through mobile number. So if you are transferring money through mobile number, this MMID, it is there in your app. You can find out from your bank also, and if you go to your bank website, they'll give you a number. You can dial that number to find out what is your MMID, that is mobile money identifier. And IMPS is a service which uses MMID. MMID is a code, a 7-digit unique code issued by a bank to both the person sending the money and the one who is receiving the money. And this code is used by what? It is used by IMPS, Immediate Payment Service. IMPS is an instant interbank electronic fund transfer service through mobile phones. It helps customers send money from one one account to another instantly using a mobile system, and you can use account number plus IFSC or mobile number plus MMID for transferring funds. And there is an upper cap for this. Upper cap for daily transfer is 5,000 for those who are doing payment through NUUP. What is NUUP? Just now we have discussed. And 50,000 is the upper limit for transfer for those who are using it through a mobile app. So all these things we have discussed in detail about different ways of transferring money electronically. And today we are talking about electronic fund transfer. This is the age of electronic fund transfers. So in your examination, the most likely questions from banking concepts will come from electronic fund transfers. go through the video, make notes wherever required, know the full forms as well as the basic info about each of these, so that you can solve questions efficiently in your examination. Now the time, Payments Bank will be discussing in the okay, let's just understand Payments Bank shortly. I had planned to discuss it separately in another session, but okay. So Payments Banks are a type of bank. We'll be studying this in detail later on also. Let's understand this for the time being. Payments Bank is specialized types of banks that have been given license by the RBI to private entities, okay, like Payments Bank by Airtel, Paytm, and then we have Fino Payments Bank. These banks are not in a traditional way banks. They cannot give loans, they can only take deposits, and they cannot issue debit cards and credit cards. They can help you transfer money electronically, and they can take a maximum of 1 lakh rupees deposit in that. You cannot deposit more money, whether it's a single deposit or total of your deposit in an account in a payments bank cannot be more than 1 lakh rupees. So we'll be discussing Payments Bank later. Right now is the time for the class practice pack, in which you have 10 questions from your banking terminologies and concepts. Those who have passport access will solve the question that most of you have doubt in. I will be discussing in the next class of financial awareness. So best of luck to you, and best of luck to you for your examination. Thank you for watching the video.